This video discusses the question, what is stock? At its base, stock is a unit of ownership. Ownership implies the control of a certain asset of a certain value. For example, consider this unit square, which could represent, say, a property. If two shareholders have joint ownership, then one has 50% and the other one has 50%. This means that in order to control this particular asset, they each need to agree on what to do with the asset. However, since each has an input and each is legally bound to listen to the other person's input because they each have equal ownership and likely they have an operating agreement that details exactly how they need to interact with each other and not abuse their ownership powers. They each have dual control. So essentially, stock corresponds to control over assets. However, generally, this comes in the form of a corporation. A corporation, while it could be considered an asset as just on its own, has a whole slew of different assets. For example, it could have a building, could have an office building, or it could have a industrial complex, or some asset or business that is making money or has some value where someone would want to buy it and it would be worth something. There could also be a liability, but that's getting into more complicated concepts. Just on the principle of stock in a corporation, say someone owns 5% of the shares of a corporation. Essentially what this means is that they own or they have control over 5% of the company. But what that means in actuality goes back to this example up here. So these two owners have to agree on what to do with the company because they each have 50% and they have an operating agreement that binds them to that mode of control. However, if someone owns 5%, then that usually gives them 5% of the voting rights within a corporation. There's generally a board of directors and a shareholder meeting where there are lots of people who have like the highest amounts of stock overall in the company. And so there could also be like directors and people who are hired to manage the company on a more company-specific basis. But generally, if someone owns 5% of the shares, they'll like get a place on this board, and then they get a legal say in voting on what this company is gonna do with these assets. So, in a sense, stock is a form of ownership in a company, which allows individuals who have stock to control, to a certain degree, what goes on with the company's assets. However, the stock may have a slight caveat. Now, if I keep dividing this over and over, you start to see the caveat, which is there's just too many parts. You start to see that when you start dividing all these things into tiny little subunits, like if you just kept dividing and then you get these little specks, these are shares in most companies. They have like 1 billion shares, something like that. And someone who owns like 1 or 2 shares is going to have no actual say in what the company is doing. It's just too small of a denomination to really count. So what happens there is you start to wonder, how do the shares get their value? Like, does that even make sense? How can a share that's so small and have like no control over what the company is actually doing, how can it even have value? Well, the answer is that if a big investor who has lots of shares, say he has 5% of like a big company, like Pfizer Pharmaceuticals or something like that, he has a lot of shares, but say he wants more influence in the company, and so he has to buy shares from someone, and maybe there's somebody willing to sell who has 3%. But if he really wants to keep buying, like, and there's gonna eventually be like not a lot of big players who want to sell, and so on the other hand, you'll have like 40% or something of the stock, which is just common stock. Like there's all these people with like 100 shares, like 10 shares, something like that, and he has to buy on the open market from all these people too. So in order for big players to expand, they need to buy stock from the little people as well on the public exchange. And in general, they won't really know whether they're buying from someone with 1% of the company or from someone with 1 share of the company. They won't know unless they're doing like a personal deal between these like businessmen or something. Like they wouldn't know. And so where the shares get their value in these very small denominations is that they still need, in order to get more power in the company, they still need to buy from these people at the same price that they buy from these people, or from the big people. Maybe not from the big people, but actually they used to like buy all the stock and then make the company buy it back at a larger price, or else threaten to like vote to completely crash the company. But that became illegal, and now they have to buy at pretty much the same price. So that goes back to the question, what is stock? Essentially, stock is a very large subdivision of ownership in a company, which on the very large scale is backed by control of the company's assets. But on the small scale, the value of stock is more related to the price of the stock on the open exchange, and how if somebody bought enough of the stock on the open exchange, they would then have enough stock to start exerting some control. So that's essentially what stock is on a very fundamental level.